the topic we are talking about today is actually questions to our firm very often. So people will have questions and you can kind of see the trend of what people are talking about out there with all the questions coming in. So one of the questions very often we come through, people would ask it, but ask really vaguely, and they didn't know what exactly they're going for. Tax credit. This is just a buzzword, kind of sophisticated, but to business people, we knew what that word means. Tax is tax, credit is credit, but we don't really know exactly how that applies. Is that related to me or not? Am I missing one or not? So it's just something that you just don't have a very good handle. It is very confusing. And I will tell you that even for professionals like myself, I normally, if I do a webinar and I spend maybe an hour ahead of a webinar looking at the documentations that my research team provided to me, and I would be able to put a webinar together so easily. But tax credit is something that I have to look into it a lot deeper because they're just not as simple as what the word gives you. So that English words are deceiving. They are actually in depth, and you do need to know your business and know all the credit related to your business. That is why sometimes, you know, when you look for a CPA and in your mind, you somehow knows that to ask, oh, you know, are you specialized in my industry? And, you know, I am dentist. So I go to the specialized dentistry CPA firm. And I understand the approach of that is sort of like CPA firms marketing tools to tell you that, you know, we're specialized in something. But in reality, all of these related to special industry things, it needed the CPA to do study. If you work with a CPA firm, and as long as the firm has that, you know, system put in place, when there is something new, they can immediately jump into it, understand it, becoming a master of it, then that's not an issue. Just like right now, since 2020, March 12, pandemic started, and how many things came out, so many credit, so many business credit came out. One of the ones that you know is employee retention credit. And you think that is just a credit? No, it is actually have so many layers of meanings depending on the time, and the application is different, the amount is different. So it is really do require a machine behind this webinar to actually get to where we need to get to. So let me share with you the PowerPoint that I prepared for today and guide us to know exactly what we need to talk about. Today's topic is business tax credit. And I myself, my name is Ying. I serve on National Taxpayer Advocacy Panel, a federal advisory committee to IRS. I also have this book that I wrote, and I'm dragging on my second book, 10 p.m. And I really hope that after May 17, which is the extended 1040 due date, right? That's next Monday. And we, the firm will come down a little, and then I can have a little bit of time to finish the book. And here, and disclaimer as always, and make sure that you take what I said, not as a order for you to do things, but a food for thought. And so you can figure out whether you need to study something more, okay? Now, business tax credit. What is business tax credit? Business tax credit is a amount that the company or the person who does business, whether sole proprietorship, partnership, S corporation, can subtract from taxes owed to the government. Business tax credit is applied against tax you owe. Okay, so business tax credit is not the same. It is not the same as deduction in business. Deduction is deducting what? The tax deduction is reducing your income, and that is used to reduce taxable income. Deduction against income is related to, for example, to utility, to cost of goods sold, okay, and mileage and so on and so forth. Those are reducing your income, but they're not a tax credit. And the businesses apply tax credit when they file their annual or their quarterly tax forms. Okay, now I just said annual and quarterly. So this makes you think of what? Think of your payroll taxes, your income taxes. Those are tax credit against that. So in United States here, IRS is the boss for managing all of these tax credit. In other words, they're the one coming to audit you if they think your credit is applied wrong. So the IRS and the federal government is controlling the business tax credit. But I also want to mention to you that the state, different government has a different hold on their taxes. State government can have a tax credit as well, okay? So now, what we're talking about tax credit, I want you to be really clear after I flip this page. Business tax credit, it is a credit against the taxes you are going to pay. So $1 credit minus $1 taxes. But business tax deduction is not a business tax credit. Business deduction, that is to reduce your income and only percentage of your income to pay taxes. So they are reducing lesser of your taxes because they're only reducing your income. So this is where that difference is, and I want to make sure I bring that to light. So first of all, you need to understand these are different. So I have this whole page talk about tax credit versus business tax deductions. Okay, so business tax credit also have a government characters to it. So when they want to help the employees to stay at work, and so they will give credit to the employer. So they use the tax credit to try to accomplish something. Just like during the coronavirus time, this last year, and then we had what? Employee retention credit, try to keep the employee at work. And so what they did, they refund your taxes, right? They did a refundable to you. And so you don't even need to pay that much taxes. They give that money back to you. And so that is what tax credit does. Okay, so that is used to sparingly by governments because they are such a powerful incentives. As such, people often confuse them with more commonly known as business tax deductions. And the main difference between the business tax credit and business tax deduction is that tax deduction are used to reduce taxable income. Therefore, and it is not really a dollar-to-dollar offset on tax dollars. So I have an example here. So 5,000 business tax deduction. And if I have a $5,000 mileage deduction to my business tax return, so $5,000 reduce my taxable income. So you can use the 5,000 mileage times the rate I'm going to pay, let's say 21%. So there you go. I have this $1,100 taxes that I saved because I did not need to pay taxes on that 5,000. But if it is 5,000 tax credit, business tax credit, That means my total tax bill is $5,000. Now I don't have to pay any taxes anymore because it is offset already. Make sense, right? Now, more things to confuse you, but it is really, really important for you to understand it. So you use this as a checklist for you to know that what are you talking about when someone utter out business tax credit to you, okay? Number one, you want to know which government is giving the credit. So the federal government can, because they have a payroll taxes, they have income tax. The state government can, they also have income tax, right? So they can give out tax credit. So when you talk about tax credit, know that on the federal side, it is always two things you need to know. Other than which government doing that, come to federal, you want to know whether that's a income tax credit or it is a payroll tax credit, or maybe both. Okay, I say both because yes, there are both. And employee retention credit is a good example. You can do it in both places. Okay, so now let's go look at refundable. So this is another tier of understanding. Some of the tax credit means that even you didn't pay taxes, you still get it. But some of the tax credit only wait for you to pay taxes, then come out to grab the taxes you're about to pay, goes, you don't have to pay that. You know, I offset you. So one is called a refundable. Refundable tax credit just means that regardless of the amount you paid in to taxes, you're going to get dollar. You're going to get the dollar anyway. So that's a refundable. Is regardless you pay taxes or not, you get the money. Now you're probably going to say that, well, you know, no such a thing, Ying. Can you give me an example of that ever happen? Yeah, employee retention tax credit. And for the payroll end, that's what happened. Okay, so refundable do exist. And non-refundable, of course, means that when you can get it back and only because you paid enough taxes. All right. So whenever you hear the word of tax credit, I want you to, number one, understand, is that the government offers it? Then you say, yes, it's a government offer it. And then which government is offering it? Federal and state. And if it is state, ask yourself, do you live in that state? Does your business really reside in that state in order to qualify? So that's your number two. Which government? Sometimes the tax credit, the credit, some of times you go to do some project, home project, the Home Depot folks will tell you that, oh, you can claim credit for this one, you can claim tax credit for it, and you want to understand what they're talking about. Okay, be specific. So that's number two. Number three, you want to know, is tax credit against what? Against income tax or payroll tax, right? And then number four, you want to know that's refundable and non-refundable, because your strategy in your taxes is going to be different when you know it is refundable or non-refundable. If it is non-refundable, normally they allow you to carry forward and carry backward. So you could get the refund right away by filing different forms. So I want you to know that the non-refundable normally doesn't mean you lost it. It's just waiting for that to happen, waiting for you to pay so you can claim it, right? So that is where we I want to say that we clarified some very general concept. And when we talk about when we talk about business tax credit, I really don't want it to be a fancy, what do you call that? My English is limited. Fancy jargon, it's just like, oh yeah, your tax people know, I don't know, but I know I should have a business tax credit. Not good enough. And you can definitely go down my path to figure out where you're going to land that business tax credit. and don't confuse it with business tax deduction, right? Now, I'm going to start introducing to you several of tax credit is very often around our practice. People come in and they ask that question, or our tax preparers and needed to get that credit in for you. So those are the things that we see more often. So I know is useful to you. And I call the first one vaccination credit. I know it is kind of you're not going to find it on IRS website for vaccination credit, but it is a credit related to the Family Sick Act and the leave credit. And it is, what it says is that, and this is new too, and it has the period that can apply to it. I think it's from April to September, just during this period. And you can apply for this credit. And what it does is when your employee goes to take the shot and got sick for a week or for 2 days, and you still paying their salary. I actually, in our firm, and the people go to take the vaccine shot and without taking time off, so we still continue paying for wages and the benefit. And because of the vaccine was so came out slow in the beginning, so some of our employees need to drive 3-4 hours to the vaccination site to get the shot. So that then the whole day is shot, and we encourage that to happen. So we pay for that day's wages and salary. So those are the ones that you can claim the credit. Okay. So now let's say the employers are entitled to refundable tax credit for providing paid leave to employees who take time off related to COVID-19 vaccine. So they went for the whole day for shot. They come back a week, they're sick. Okay, so all of these is covered. And it is refundable tax credit. What does that mean? Means that even if I don't have enough taxes paid in, I still can get that. Okay. For example, employee who makes $100 per day and was off for 2 days due to sick related to the shot, so that's $200. Employer will receive $200 back for filing 941 quarterly return. All right, I just said payroll tax. See how that come in play, but it is a payroll tax. All right. So this is my first one. I hope that gives you a lot of thinking. And if you are an employee in your corporation and the rest of the employee are all got laid off and the business is not so good, you are the only employee and doing that, then you were sick, then you got shot, then you were sick again. And those times that you paid yourself qualifies for this vaccination credit. Okay, now let's go to my next credit. My next credit is called Healthcare Tax Credit. This is not new. This has been in existence for a long while. I think it actually got implemented on the Obamacare time. So it was President Obama's time. It's already started. And you may qualify for small business healthcare tax credit that could be worth up to 50% of the cost the employer paid to the employee's premiums. Okay, so I did 35% for nonprofit because that is different. So 50% is only for profit-making company and 35% is a nonprofit. And it asks the employer to enroll in this, I call them SHOP. They are just Obamacare package. If you are an employer, you buy multiple health insurance, you absolutely already gone through that. So if you never heard of it, don't worry. You are 99.9% is already on it. It's a small business health options program and plan. This is the plan that, just like the other health insurance, is generally the only way for you to get this treatment, so you need to be a small business health options program. And a good example would be that, let's say if you are a small business owner, you didn't offer the benefit plan. You just went out and bought your own medical insurance. Then you say, do I qualify for that? The answer is no, because when you bought your own, you probably bought individual plan. You didn't buy small business health option program. So only when you got that, you can get into this, what we called premium tax credit, give you 50% of premium back. All right. So underneath there, all of the condition must exist. There's 4 conditions. Number 1, you must be using the small business health option program. Number 2, you have fewer than 25 full-time equivalent employee, and your average salary is less than 50,000, and you pay at least 50% of the premium cost. That means you have to offer maybe 80-20, 60-40. 60 means that you pay 60, your employee pay 40. Okay, so with that, with all of these conditions exist at the same time, you will get that premium. You will get that tax credit, which means that you will not needing to pay taxes. So those 50% of premium come back, becoming a tax dollar offsetting the taxes you are paying. Okay, so now look at my example. Number of employees is 10, and the wage total is 250 and 25,000 each. So we're under 50. 10 employee, we're under 25. The employee paid health premium. This employer paid. So maybe the premium, it is a lot more. It's a $140,000, but you paid half because your employee paid the other half. So you paid health for 70. Then your credit is the 70,000 times 50%. So your $35,000 taxes just got saved. And what if you say, well, I didn't have taxes. Now what am I going to do? And is it going to refund me a $35 nice check? No, it is going to be sitting in your system on your tax return, waiting for you to gain money, then you can get that money back. Waiting for you to pay taxes, then you can get that money back. Okay, so it is a non-refundable tax credit. Now, the next one is Rnd tax credit. If anybody heard about that, I actually have a lot of business clients ask for that. And I, frankly speaking, out of all the businesses we have in our firm, the one really qualified Rnd tax credit, it was just one. Okay, so a lot of people don't qualify, but it is a very well-known credit. People ask. So what I do here is I listed a bunch of things for you to tell you what doesn't qualify. I think that will help you, because you will know that when to apply for this credit and when not to dream about this credit. And what this credit does is that, let's say if you do a research and development thing, and a good example would be that a software company and is designing a software, then when people are designing a software on some device, let's say designing a software in an office setting, and that tied to the camera. So every time when the front door opens, a new client come in, and so the computer program will recognize the facial image and then pull up the client profiles in your system. So the reception, before they even turn around to talk to you, you already know this person's face, this person's name, the family, the hobby, how many dogs they have, and the things like that. Let's say that is somebody is doing research and development for that. That qualifies. Let's say they bought $100,000 materials for that. Then they paid $100,000 for a genius computer scientist. So the cost is $200,000. And when that happens, you look at my bottom, there is example, 6% of that $200,000, $12,000, that is the credit. Non-refundable means that if the company pays $12,000 income tax because of this credit, they don't pay. All right. And I know the calculation is not as easy as I say, because I want to just add a little wrinkle in here, because I don't want you to think that it is like exactly add and the times 6%, then you got it. What happened is the credit, the 12,000 got add back to be your income. So the calculation is a little off, and it's not exactly 6% 12, so you got 12 because your tax liability is a little higher. So let's say you had a 12,000 tax liability. Because of this credit, you actually, your tax liability after I put in the credit back, and it will become 13,000 tax liability. So subtract the 12, you still pay 1,000. Does that make sense? So that is how it works. And don't quiz me on this, because I am the accountant, or I am the accountant you met, and who doesn't know how to add and subtract. And I relying on computer, and I save that part of my brain so I can do something else, because my brain capacity is limited. Don't you think? I always, when I was a kid, and after the exam, I memorized a lot of things. So after the exam, I would walk my way home, and on the way home, I will be taking out of those things I memorized. I'll throw them away. Mentally, I'm like, I'm done with this. It's so useless. So I throw them away, especially history class. It wasn't the one I really liked when I was a kid. I like it a lot now, but when I was young, I don't like them. So I try to remember them and forget them. And that's what I always believe, the capacity in brain. So I don't try to add and subtract anything really. So look at this R&D tax credit, folks. It is also called increased research activity credit because they had so many names. It is very confusing. And R&D is the easiest, is the oldest name. And now they call, on the new tax forms, they call that increased research activity credit. So the credit generally just allows the kind of activities you are doing on the research and the development, and to give you 6% of that back. Actually, the 6% is also simplified version. It can be 14%, depends on whether you give prior year information or not. But let me just leave it this way, so I don't really want you to get overwhelmed with what I say. My goal in the webinar is not to give you the adding and the subtraction and give you a number. It is really to give you that concept. So when you get into your business and you remember those concepts, then you know how to, research it up. Because by the time you research it up, maybe the rule had already changed. But the good thing is that I still say the tax rule, although it changed a lot, but is very reasonable. It is not as crazy as this last 2 years. But maybe this last 2 years will mark the most crazy time in tax history, because I just can't believe. I don't think small CPA firms would be able to survive with all of these changes so fast and giving so short of time. I'm just lucky that we have a research team here, and Dr. Howe in charge of that team. Catherine helps me. Yeah, those are heroes without name. I don't want you to know them, so it's all my credit. All right, so I listed a couple of things to tell you that they are not research and development tax credit doable activities. So number one, it says that the research credit generally isn't allowed for the following type of activities. Number one, research conducted after the beginning of commercial production. So say you developed this super camera I was talking about, right? So you went into production and realized something is not working, then you started doing research. That do not allow. Research, because they want you to do that only before commercial production. And research adapting an existing product or process to a particular customer's need. You should charge that research and development time and material to the customer instead of getting a claim on your tax return. So you should have the expense, you should have the income, they should offset, you don't need credit. That's what the government's saying. Duplication of an existing product and the process. For example, and you are duplicating a camera that is out there, that's not your research and development, you're duplicating. Surveys and or studies. You see, just because you survey the customer, just because you studied issue, and that doesn't qualify you to get research and development tax credit. And you may ask me that, well, Ying, why not? Because that's part of the research development. I don't know. I don't want to argue with you, but this is exactly what IRS said. And in my practice, I have not yet had a client coming in and doing survey and studies and wanting research and development tax credit. So for that reason, I actually don't think people would do that. And we don't have anybody I knew had done that. Research relating to certain internal use computer software. Okay, so internal use computer software is not meant for commercialization. That's what they're saying. If you're doing something not meant for commercialization, why you need to do it to do the deduction? It's almost like if you bought a pair of boots for yourself and to wear, it's not a business expense, right? So same. So that's the idea. And the research conducted outside of US, Puerto Rico, or a US opposition. So yeah, in China, research conducted in China doesn't qualify for Rnd tax credit, even though you paid a lot, doesn't qualify. Okay, research in social sciences, art, and the humanities. Okay, trying to figure out how research related to I don't know, I'm just dreaming things up really quickly. For example, how many newborns, the newborns are ended up in this particular area, ended up in which kind of kindergarten setting and what kind of private school. So those are humanity and the social related, right? No, they are not a thing that can be commercialized. They're just providing information, right? So now you kind of understand where I'm going. Research funded by other person or government entities. If research is already funded by a person, and that person might be deducting that expense, so you don't get credit for that, and you have expense, you have other income, is offset to zero, right? And if you incur qualified clinical testing, how the COVID vaccine, that is research and development, but these people don't use this tax credit. They use what they called orphan drug credit. And I don't have a pharmaceutical company. Well, I shouldn't say that. I do have one, and I don't have those popular ones, the big ones, to be our client. So it's really, how they apply for orphan drug credit, I didn't really do. And so, but this is another credit they need to apply, not belonging to here. So that gives you an idea, right? So generally speaking, your research and development need to be out-of-pocket expense, has to be your expense. And also, it is for a commercialization in mind product. So it need to be resold. It need to be a part of the product development, and it need to fall within your company's scope. So all of that, it is a way to get the tax credit, folks. If you have those, and never really looked into it, it is time. Next is a credit called Work Opportunity Tax Credit. Work Opportunity. And this is an interesting tax credit. And the spirit of this one is that if you hire people and they normally don't get hired, and you will get 25% of wages paid to that person to be your tax credit. That's a lot. Let's say if you hire someone $100,000, 25% is $25,000. That would offset your taxes, folks. That means it's offset close to $120,000 income. If you made $120,000 income, maybe you pay 25% of taxes, all gone. So you got $120,000 income free of taxes. Some people goes, well, I want to buy 401k so I don't pay taxes. Here you go. You have $120,000 income. You don't have to pay taxes if you can watch who you hire and where they're coming from and to see whether you qualify for Work Opportunity Tax Credit. Okay, let me explain. The Work Opportunity Tax Credit is a federal tax credit available to employer for hiring individuals from certain targeted group who have consistently faced significant barriers to employment. So you can think of those people, right? And for example, as felon, those people who are in jail, came out of jail, there are significant barriers to their employment, no doubt, no doubt. So look at these people and qualified IV-A recipients. I suddenly forgot what they are. I will go to I'll go to the website with you. We look at that. I remembered it, but now I forgot. That just tells me that I don't deal with that every day. Qualified veterans and ex-felon and designated community residents and vocational rehabilitation referral, like people on wheelchair, and or maybe they got injured for something and now cannot do their old job and they need to start a new career, people like that. And summer youth employees, I want to pull this one out because summer is coming. And if you're hiring someone in the summer, and don't forget, you might be qualifying for Work Opportunity Tax Credit. Number one, it is at least 16 years old, but under 18. And the date of hire is May 1st to September 15. So they're just carving out the school vacation time for you, okay? And residents in empowerment zone or enterprise community or renewal community, and a lot of community, Des Moines qualifies for that, okay? So today I'm in Des Moines, I'm in my Des Moines office. So Minneapolis Twin City qualifies for that. And there's most of the cities qualifies for that. So if you hire someone, come on, why don't you think about it, right? So 25% of wage paid to that person. So let's say you hire a student and for $1,000 a month, and 25% is $250. That offset your taxes. That represents $1,000, $10,000 income that you made is tax-free. How much can you put away for 401k? IRA, those ones, 6,000, 401k, and what, 19,500. So that is a huge tax saving tools, folks. Okay, don't forget. Of course, you need to have that in payroll. You cannot be just saying, oh, paid him cash, so I can do 25%. No, they need to be in payroll. Okay. All right. Now let's go to A1. That is so confusing, but it is so important. So I have to go through this with you, and it's called Employee Retention Credit. All right. You probably goes, Ying, today we're talking about business tax credit. Why are you mentioning this? This is not. This is COVID time we have this. And we're only going to have it till the end of this year. So why it is related? It is related. Number one, it is a tax credit. Number two, it's a federal tax credit. Number three, it's a payroll tax credit. And number four, it is refundable tax credit. All right. So it is a big deal. Now, let's take a look at this because I want to separate this for you. Do you know that this employee retention credit is a payroll tax credit, but it also can be an income tax credit? So my next slide, I will show you the income tax credit part. But right now, let's focus on the payroll tax credit. So employee retention credit is payroll tax credit and getting really, really popular because of COVID-19. So starting from March 12, 2020, it was originally set to expire at the end of 2020, if you recall. And then the Consolidated Appropriation Act in December, when they were, fighting over the vote counts during those times, they extended this one through the first half of 2021, which is on July 1st. But then American Rescue Plan, this is the one issued by President Biden. But the other one, the Consolidated Appropriation Act, that was still issued by President Trump, although he was, busy with the vote count fraud that he claimed existed. So with that, so this American Rescue Plan extended the credit through the end of this year. So now we ended up with employee retention credit and with at least 3 times of change between 2020 to 2021. So the employee retention credit is the offset to employers' share of the Social Security tax within the FICA tax form, that's 941. And after June 30th of 2021, the Medicare tax as well coming in, you can offset. As such, it is claimed on employers' quarterly return on 941. And I want to mention to you that a lot of folks really hasn't really done that because your CPA firm was so busy. And like us, we were so busy, really don't have time for this one because this one has a 2-year timeline. You can always go back to amend your 941, so don't worry. And you can wait for us to come around to take care of you, okay? And so there are rule changes. I want to mention that quickly. So for 2020, when you apply for employee retention credit, they require the sales to be 50% drop, and or you shut down or partially shut down if the money is not paid by PPP, and you can get maximum $5,000 per employee. Okay, that's 2020. So for 2021, first quarter, second quarter, your sales 20% drop, and it's $7,000 per employee per quarter. That's a limit. Okay. And of course, if you do 2 quarters, then you will have 7,000 for each employee twice. So after the American Rescue Plan Act came out, they extended this all the way to the end of December. And that rule is if you have a 90% of drop, and then you get the 7,000 per quarter again. So you would, when I wrote the 90%, I wasn't really quite sure. I could literally be writing that wrong to be 10% drop. Just forgive me, I didn't have time to sort out my thought, but know that, I had this disclaimer from very beginning. So make sure you check on that, okay? Because I know the third quarter and the fourth quarter was different from the first quarter and the second quarter for 2021. The amount is the same, the requirement, the qualification was different. So make sure you check on that. And actually, the second part of the qualification, there is some coordination need to be happening with PPP and all that. The rules wasn't even out yet. So it is not just me slow. IRS is also slow. Okay, they didn't come out with the rule yet. So now let's look at the other one. This employee retention credit, remember, is not just for payroll taxes, it's also for the employee, also for the income tax. I'm just gonna confuse you like hell. Okay, so that one we had earlier on the 941 change, that is coronavirus related. But if you have a disaster that unrelated to coronavirus, related to FEMA kind of disaster, last year, August 11, Iowa has one. Iowa has a tornado that was actually, broke one of my truck on the parking lot. The tree just fell on it and smashed it. So that is a disaster. It's not virus related. And in that time, okay, the eligibility is that this credit you claim, and it will be offsetting your income tax, not payroll tax. Okay, so let's hear what I'm going to say here. And you must have conducted a activity, and you must have conducted an active business in this qualified disaster area, okay, and not operationable at that time. But you hired people, you still have them even though they do not work, okay? The credit is 40% of qualified wages, up to $6,000 per employee, up to $6,000. So 40% of $6,000 per employee, that is $2,400 per employee, right? So up to that. And there's no limitation. There's no limit on how many number of employee you can claim in this credit, okay? The deduction of compensation is reduced by the amount of credit. So what they're saying is, let's say if you got $24,000 credit, and they add that back to your employee expenses. I mean, they reduce your expense. So you actually get taxed on the credit, but the credit itself go to reverse your income tax. So this is what I was saying to you, that it's not exactly business income tax credit is not exactly like, you times 6%, 14%, then you got the number, because the credit itself goes back to be income. So your actual taxes grow by a little bit, but the big chunk is still out of the credit. So that's how it works from the mathematical standpoint, which I am really bad. So I hope I didn't confuse you. So you want to coordinate with other tax credits. So it says that you cannot use the same wages for other credit like R&D. Okay, so you cannot do that. And they also say that if you have coronavirus related, oh, don't come over here. You go to the employee retention credit on 941. That's why on the slides, you see me having 5884A. That is the form you use to produce the non-coronavirus related retention credit. But on the retention credit is 941, right? So isn't that cool? I confuse you enough. Am I right? Okay, so this is kind of, I have this note, I don't know what that is. Okay, here. All right, so I have this is not. I have another credit I want to talk about. That's a credit for employer tax paid on tips. So this is the credit that I often hear people talking about, because in the service industry, you know how tips happens, not just for restaurant, right? Tips also happens for other industry. Sometimes we even had clients giving us tips. We're tax professionals, accountant, the auditor, and we really don't normally get tips. So this credit though is only need to be given to people of the two condition all satisfied. So I want you to follow me to see that. Of course, you file 8846. What this does is that all the tips that you got in the restaurant, like in the restaurant owner, you know how you put the tips on the salary, on the wages. So the employee pays the portion of Social Security Medicare, but you actually match that match portion, come out, refunded to you. Okay, refunded to you dollar by dollar. So this is the tips credit. But a lot of times we have clients are confused about that, and especially if they are in other, for example, hair salon, you often got tips. But do that tips qualify for this? Let's read it, because you have to qualify for those conditions. Number one, you had employees who received tips from customers for providing, delivering, or serving food or beverages for consumption. If tipping of employees for delivering or serving food or beverages is customary. Clear, right? So clear. It is only for restaurants, for bars. All right. Number two, during the tax year, you paid or incurred employer Social Security and Medicare taxes on those tips. That means you included those tips on the wages report. You paid your share, your employer share of Social Security Medicare. So these two conditions exist. You got employer tax paid on tips credit. And I'll tell you, I have come across restaurant owners' business tax return and no such report. Not there. And how could you not? That industry is customarily with tips kind of practice. So just want to point out that to you. And then the last but not the least, I want to mention to you of all the other credit, and we for sure didn't cover all the credit, but what I am telling you here is that these are the credit are most often show up with the small business, medium-sized business owners. So credit for small employer pension plan setup up to 5,000 folks. If you, I just had a couple of clients ask me, our company is growing. We like to offer a 401k plan for our employee. And how do we do that? And so, we got them introduced to got that set up. And then they incurred $10,000 fees. There you go. 5,000 tax credit, folks. It is not 5,000 expenses. So you will save at least $100,000 on income when you reduce the 5,000. Okay, that's up to 5,000. Credit for employer provided child care facility. So if you provided child care facility, you have expenses related to that, there is a credit to that too. Solar incentives. Okay, solar incentives is interesting because I thought it was going to disappear, but they actually came back all the way to 2022. So I want you to know that it's a 26% on solar tax credit. It means that the business making an investment of 100,000 in solar would offset federal tax bill for 26,000 by expense. So let's say if I put in a solar system for 100,000, then I times 26%, so I got 26,000 tax credit, non-refundable. Non-refundable means that I have to pay taxes in order to get that back. Okay, so that's why it says that offset the federal tax credit. Oh, there's so much, right? I don't want to go over an hour, so I want to just say to you that follow us on YouTube, and I want to quickly and go over to a place where I was like looking at this. Remember that work credit thing? I don't know. I can find it really quickly. No, this is not the work credit. Well, if I cannot find it, then you won't believe me, right? Yeah, I don't know. I have to search, but I don't want to waste our time. And I do want to lead you to our YouTube channel. This is where we actually, did I still share the screen? Or I never shared the screen today. I don't know. Maybe I didn't share screen. So let me just share screen right now. See, this is our YouTube channel. You can subscribe to it. All of the webinars I talk about today is showing up here. So you can always review what I said. And here is our website. And on here, and you actually see, this is my 10 a.m. book, and that's still cooking. And then this is what we tell you that to go for our YouTube. And here are the list of the webinars that we're putting out. So we still have more to come. So you can come here to register. All right, folks, I'm really right at the dot, and it's almost 4 o'clock. And thank you for joining me. And I do see 2 questions, really. Let me see what we do. If you're using TurboTax, would they take all these credit into their program if it is used for doing our taxes? Such a good question. I actually don't use TurboTax. I felt if you have a business with all these business taxes that you qualify, I would not use TurboTax. It's really meant for individual taxes, right? Maybe you have a Schedule C. I think you would find it. I just don't really know how to look for that. Would Rnd tax credit apply to consulting? Part of the expense, yes, part of the expense is consulting, but you need to make sure that it is not just studying, right? It is not just for internal. It needs to be something that you meant to commercialize that, right? So hopefully that answered your question. Bye-bye, everybody. Really appreciate you coming with me on Saturday, 3 p.m. It's such a gorgeous time. I felt like you should stay next to the pool and never come out for a webinar. But use your phone. You can also get on a webinar while you're swimming. Okay? I'll talk to you again. Bye-bye.